Hello, all. I'm Kurt Steuck, and I started out like many people working in as a sole proprietor, working by myself. As the business grew, I needed to take on a couple of consultants, so I brought consultants on board. Company kept growing in terms of business, and so I ended up realizing I needed employees. And so I've worked over the last 12 years in understanding the differences between the business structures and the tax structures. So in the upper left-hand corner of the green area, there are four different business structures that are common in our areas. The sole proprietor, which is what we start out at, an LLC with a single member, an LLC with multiple members. And then LLP is a limited liability partnership. There are a few of those around, but mostly we're either sole proprietors or one of the LLCs. There are differences between the LLC single member and multiple member, which I will get into in a couple of moments. There's a couple of things you need to be careful at when you form your LLC. Okay, LLCs are different than your tax structures, and your tax structure is an IRS thing. Your business structure is a state thing. So the tax structure with the IRS, they have a wonderful term for you that's called disregarded entity. If you have your business and you file your business income and losses on your 1040, the IRS calls you a disregarded entity. The other approach that many people are doing is the S corporation, and I'll get into a little bit more of that in a few moments. In the lower left-hand corner, you can actually mix and match those two kinds of business structures and tax structures. So you can be a sole proprietor, disregarded entity. That's good for starting out. That's what I was. Did all my books on Excel. I hired a couple of consultants, paid them by checks. Um, Straightforward, relatively simple business model. But you can also be an LLC and a disregarded entity. So you can form an LLC with your state, go through that whole process, but still file your business income and losses on your own 1040. So you'd be a disregarded entity and an LLC. The third option is what I am now is an LLC with S corporation taxing. And what that does is separate out my personal taxes and my business taxes. So the S corporation is a way of separating out your personal income and your business income. So, sole proprietor, if you are in going to the blue upper right hand corner, the sole proprietor and plus disregarded entity, the first thing you should do is file doing business as, and essentially it's just claiming your name. We in Texas do that with our county. Each state may be different. I'm not sure. You'll need to look uh, as to how to do that. But by filing a DBA, it'll avoid confusion with you using somebody else's name or somebody else later on taking your business name. Now, I filed my name as Steuck and Associates, so there's no one taking the name Steuck as part of their business, and that was part of the advantage of it. But you do need to file so that you can claim your name. Second recommendation is file for an EIN, the employer identification number. And you can do this as a sole proprietor. And that way, you don't have to use your social security number anymore. So you give them the EIN when you're going to your customers and setting up payment and such. Give them the EIN rather than your SSN, just another layer of protection. Get separate bank accounts so that your business accounts are separate from your personal accounts. And then you can go through registering your domain name and creating the website and doing all your cool marketing. You do that, you can do all those things as sole proprietor and disregarded entity. If you want to create an LLC, I recommend that you hire a small business lawyer. I did that. And the reason is that second point is creating your articles of incorporation. The article of incorporation says who you are and what you're doing, what roles you're playing. And if you have a multiple member LLC, you need to put in there how do you resolve conflicts? How do you resolve disagreements? And if one partner leaves the company, then what happens to the assets? What happens if you end up closing the business and you have to dissolve the assets? All of those things can be specified in the articles of corporation if you're in a multiple member LLC. I'm a single member LLC, so I didn't have to worry about some of those things. And then you can file the paperwork with your state. Each state's different. So while I have a lawyer in Texas that I've used that I really like, she's not capable of doing in all of the other states that would where you would need to file your LLC. The last part that I want to talk about on this slide is creating your S corporation. One of the things that I did was hired a CPA to help file the paperwork because I read through all of the IRS documents on how to do this and I thought I knew what I was doing. There was like one form and a second form, and I thought you filed one or the other. Find out you filed both of them. So the CPA helped complete my forms. We talked about different options, and he actually filed the S corporation for me. Now you file the S corporation with the IRS, the LLC with your state. And the other advice that I have about moving to an S corporation is get one of the professional accounting finance packages. I use QuickBooks Online, and through my network, I found a QuickBook Pro advisor, and he helped me set up my company in QuickBooks Online. And when I first started talking with him, he goes, "Yeah, here's the process, and let me send you the process that we need to go through." It was 34 steps. I would have known about 10 of them, but he had 34 steps, and it took us 2 3-hour sessions to set up my QuickBooks Online, but then I was done. The nice thing is when something goes wrong, the pro advisor has a direct connection into it and can answer questions quickly. So that's the major parts I wanted to talk about. The first thing, though, is before you act, learn. Do as much learning as you can. Matt and I are big supporters of the small business uh, development centers. I took somewhere between 10 and 12 workshops with them as I was setting up my company and learning about insurance and paperwork and hiring employees, just a variety of topics about running a small business. And initially, they were 2-hour in-person workshops, and then they went to virtual. So some of them are in person, some of them are virtual these days. You can check with your other local resources like Chamber of Commerce, the universities, professional associations. They may have professional development also. So the LLC provides protection of your personal assets. The S corporation is actually a good way of reducing your taxes. And the rules of thumb that I've heard are anywhere from 100,000 a year revenue generated to 120, not profit, just revenue generated. Once you start breaking, those 6 digits for income, then setting up the S corporation might be more tax advantage to you. So getting started, you can start it as a sole proprietor and then work your way up to an LLC, work your way up to an S corporation. Once you get going, then you can start doing the other things like the finances, the project management, and so on. Okay, I'm done with my presentation. Questions?
Kurt, yeah, so question, comment
Yes.
thing. In Florida, we do not have income tax, state income tax, and there are, I think, 5 other states that, or maybe a total of 5, some number of states don't have state
We're
income
one of
tax,
them.
but they do have corporate taxes. So you may not save in your taxes when switching from a sole proprietorship to a S corp, because then you will be liable for state taxes on your corporation. So you'd have to really look at that carefully to see if that ends up being a savings or not being a savings. So if you live in a state that doesn't have state income taxes, but does have corporate taxes, it's a little more complicated to figure that out.
Texas does not have the individual income tax. And so far with the state tax, the corporate tax, I haven't had to pay. It's part of the filing that goes through with QuickBooks Online. I did have an employee in Ohio, so when I did payroll, I had to pay the state of Ohio income tax, the community income tax, and then their school district income tax. And so, yes, that was the nice thing about QuickBooks Online, is that it took care of several of those. Okay, was there another hand up? Yeah, Mary.
So I'm whoops, now I just became small. Hold on just a minute. Okay. I lost you. Where's yours to pick? Oh, you took away the picture.
I did. Do you want me to show the picture again?
Yeah, can you just show the picture just quickly so I can tell you what I want to talk about? And then
Sure.
so I am a sole proprietor, and
Yep.
I'm a company of one and don't plan to get any bigger because I'm really, to the extent that I have a niche, it's to be supportive of other businesses, to be a subcontractor or to do very, very small kinds of things. But I'm interested in this disregarded entity thing because I don't think there would be any advantage ever to becoming an S corporation, but the idea of becoming an LLC plus a disregarded entity is kind of interesting. And Mike, so I have two questions. What is the income break where that would make sense in terms of how much it would cost to pay a lawyer to do that? And um, and also, I mean, I like the idea of being, and I also, again, the other question I had is, I didn't know you could get an employee identification number if you were a sole proprietor. I thought you just used your, and if you do that, do you have to file separate taxes for your business?
Nope. No, you still file, your EIN is just a registering your company with the IRS, but it's not like setting up an S corporation where you're going to be taxed separately from it. You're So the EIN you can do as a sole proprietor. The LLC protects your personal assets. So if
No, I
something
know that, and that's the one thing that,
you,
not that, I can't picture why we get sued for, but you never know.
right,
The that appeals to be doing, but it seems like it would only make sense if you had assets to protect, so
right,
um,
right. But as a sole proprietor, you can be you can be a disregarded entity or an LLC. The In both cases, you would file your income taxes on your 1040 with your personal taxes.
okay, so that what you would do is there would be like a separate form that would be ask you for a different EIN.
No. Um,
You have 1 minute left.
Uh-oh, okay.
oh, I don't know. I don't know what the 1040, I don't remember
Well,
filing.
1040 gets filed under one, and when I can
Like,
come into your room and we can continue this discussion.
yeah,
Yeah,
I have to look at
yeah.
the form.
Yeah, I mean, 1040s are
I
filed
have
under.
I have an EIN and a sole proprietorship. I do it, just do it on the Schedule C, and you can put
Okay.
your EIN on your Schedule C, but you still just do
Let's
the
see.
same Schedule C you've been using.
Okay. Okay. Sounds good.
Thanks, Melissa. Any other questions, comments?